Hi traders, welcome to Wednesday. It's where are we? We're the 25th of February. So we've got Wednesday, Thursday, Friday, 3 more days of February to go. Hope your February's been a good one. Apologies, I've sort of stopped posting my end of day trades. I've just been really tired out on night time, so 10:30 time, 11 o'clock when I used to start putting the end of day stuff up. I just haven't been doing it. Basically, I've been really tired, so I apologise about that. I'm feeling a bit better today, so we'll perhaps restart it later on in the week, on maybe even tonight. Who knows? But it's going all right. It's not great. It's much better than January. We had a losing January, but February's been okay. Uh, we're in the money, which is the most important thing, and more short term. Actually, scalping. I'm doing that sort of some 5 minute, 2 minute, and 1 minute trading. So if you'd like to know some more details on that, let me know. I'm here to help you. So we're going to be trading. Or having a look at the short-term trades on the DAX and the Nasdaq and the Dow. The Nasdaq and the Dow as we come into the US Open. We had a horrible opening volley around the DAX Open this morning. We were okay, or I was okay earlier. The chart I've got here actually is the FTSE. The FTSE is the FTSE 100, the UK, the main UK stock market. And we've hit all-time highs this morning. I just put that on earlier, and it's gone. Last 5 minutes or so, it's gone even higher. So the FTSE at 4,790, a new all-time high today. The DAX also bouncing in the last hour or so. This is the 5 minute chart, guys. So we're looking to short this, but you can see the trend here. So 5, 10, 15, 20, 25. Last half an hour, we've had a strong stand up here on the DAX, still moving higher. The K and the D line here on our stochastics, we need them to cross and move down if we're going to take a short position, but that's still moving high. So don't try and catch the top until the system's telling you, we've hit the top. If you just even on the 1 minute chart, well, there we go. The 1 minute chart has ticked over, but it got stopped out. So that would have been the initial short there at 13.45, but it's gone against you and stopped you out. It's moved up. There's another clear short there, and that's still valid. So that would have been your stop loss up there at 25.156. Your entry would have been down here at 25.145. So 10 pip stop, but it's going back against you now, and they've touched. So I'd have taken the loss on that one. In here and out now because they've touched, basically. And that's the thing. If you're going to trade a 1 minute time frame, you don't hang around to let the losses ramp up. So the trend, we've had a dip here in the 1 minute, probably a dip in the 2 minute as well. It's sort of smidged. There you go. The 2 minutes a bit clearer. Sorry, let me can I zoom that up a bit? 2 minute. There we are. I've moved too far ahead, I think, haven't I? So you can see the touch. They haven't actually, they've sort of just smidged away. So clear. Remember, we're looking for clear distance between the K and the D line. So really on that one there. So you'd have got in on here. And again, if you had your stop loss up here, it's still in the money, but again, it's gone against you, hasn't it? And we're still in the overbought area. So it's looking, the trend is strong in these last half an hour here as we go into the US Open. Still, where are we? Still 25 minutes away from the US Open. So the DAX still moving high, the FTSE still moving high, and the two markets are going to concentrate on. We'll do the DAX, the Nasdaq, and the Dow. Obviously, guys, if you've got anything you want to have a look at, if you want to trade oil or Bitcoin, Pearl Bitcoin, let me know, or the indices as well on this mean reverting strategy. I say let me know, but we're going to concentrate on the Dow and the DAX and Dow and Nasdaq and the Dow. Oh dear, the Dow and the DAX in particular, and the Nasdaq as we come into the US Open. So if we look at the Dow, our preferred index to be trading. I thought I'd mark this. Oh yes, we are. So pre-market high. I'd done that earlier. It's already moving higher. So we got bias to the upside. There's our pre-market low at 49,089. So just above the 49,000 handle. Today, this is today's action. Yesterday's, obviously, we had a nice bounce back yesterday. Dow was up 0.76 of 1%, so 0.76 of 1%. The Dow was high. We had Trump's ramblings, an hour and a half, the longest State of the Union speech ever. So the senator, the Democratic senator that responded to him had to wait quite a while before she got her chance to respond. But really, it was all about his first year, as you might expect. It was all about him, as ever, and there's nothing new there. The rhetoric on particularly Iran is the one that's really causing the most sentiment in markets. Didn't really change. He's got a lot of hardware in the region now. So is he going to back down? I find it quite surprising if he does. But he says he's president of peace. We'll see what happens. The Iranians still negotiations, official public negotiations, as far as we know. Us, common plebs, it's not happening. But there's obviously lots of talk going on behind the scenes. Situation between Russia and Ukraine as we now celebrate's the wrong word, isn't it? Commiserate the 4th anniversary of the Russian invasion of Ukraine. Still unbelievable death tolls going on there, and still unbelievable sanction busting going on around the Russians. But what can you say? Power and might is prevailing there, and Zelensky's doing his best to try and keep everyone on side in the West, but Putin, as ever, laughing all the way at the bank. Stock markets higher. Let's have a quick run through everything else before we start looking at some potential trades, because that's so what's happened. So a standard 5-minute trade here. Sorry, I forgot what have I got. This is the Dow, isn't it? Sorry, I've got cryptos up here. So this is the Dow. It's had a cross here. We haven't had a touch of the outside of the Bollinger Band since here. That was a touch. So that was short. This turned up. So it's crossed. So we need nothing's happening there. In the 5 minutes, as we said, the trend is outstripping our mean reverting strategy. And you even see on the MACD, that's cross positive as well a bit later here on the 5 minutes. So that's to the upside. Sorry, let's go back to that's the Dow. The Nasdaq, similar pattern cross here, but again you see the trend. So that would have triggered a short there. So this strategy here on the 5 minute would have gone short here. Stop loss above that, around about that wick probably, and stopped out 5-10 minutes later for a losing trade. And it's continued to move higher as the stochastics have moved down. So price actions continue to move up. We've got divergence on the stochastics moving down, so suggesting weakness to come. If we're going to mean revert, if we are going to revert, and obviously that's clearly telling us what's happened since, is that the trend has outstripped the power to move lower. So the sellers have been outbid by the buyers, and we've moved higher. Nasdaq here moved higher, and then we get a cross here on our stochastics, the K and the D line crossing here as we did move into the 20 period, but it's a positive candle. And then we got a new high of the day, and new high of the day. I haven't actually put that in yet for the Nasdaq, but you can see the pre-market high that's today. So the pre-market low, much like the Dow, we had that spike at that's the beginning of the day. It's here, isn't it? So we had that spike here. It's a technical spike at 3:30 after his nibs had finished. On our time frame here, the president was starting to speak at 2 o'clock, and he's finished around about here 3:30. So there was a flurry in the futures markets that were open then, and so obviously that's our pre-market low, and our pre-market high is currently where we are now. It's Control M, I think. No, it's not. Let's go off. That was the wrong control. So let me just get that right. It was it's Alt J. Alt J is what I was looking for. So that's our pre-market high today. So that's the high. That's the low on the Nasdaq so far today, and the bias is the upside because again we had a strong move yesterday, 1% and a bit. The Nasdaq wider Nasdaq closed. The Nasdaq 100 was up 1% as well yesterday, through the key 10,000, 25,000 level in roundabout close yesterday. and dipped under it here in early European sessions. But since then, since the mid morning here, the European Open here at 8 o'clock, we've been over 25,000. We're currently 25,150. So they're biased to the upside. So, if you want to trade with the trend, with the high time frame trend, you want to be taking longs on here and sort of ignoring the mean reverting strategy, because it didn't work there. Did it work there? Not really. Gone sideways. So the trend is strong. So perhaps we should be looking at trend following strategies. And if you use our cleanest of all, which is the Heiken Ashi and the VWAP, you can see clean move here ahead of the US this morning. Sorry, this is it's New York time, isn't it? So this is the mid morning here, 11:30, and up here. So you can see here this candle saying it's at 10 past 9, and it's at 10 past 2. So it's 5 hours we've got to add to it. So this is 10 past 2. This is our time now. So this has been nicely positive there for the last half an hour again. So 5, 10, 15, 20, 25 minutes, and we're on the up. So that's our bid there on our VWAP calendar. So let's use the today. Let's use the MACD and the SAR, which we used. We did it was part of our webinar yesterday. So this one now has crossed there. So Nasdaq will have gone long here. Let's see if we can probably take this for demonstration purposes. So that's gone long there on the cross of the MACDs. This isn't great for the 5-minute time frame, to be honest, but let's take this trade anyway, because let's say it's for demonstration purposes more than anything. We'll take a buy on here. We'll put our stop loss. So we'll go in long. Our stop loss. Well, let's do it as we were talking yesterday. So put our stop loss down. Our initial stop loss, because it's whipping around a lot, down here at 25 and what is it? 25 and 74. So 25 and 74. We're going to take our smallest amount, 0.01 of a lot. So we'll place that trade. We've bought that, confirm that, and we're long on this candle here. That's the one that's triggered off. But you can see that we've already moved back down. So it's not great for the 5-minute trading the MACD setup. But anyway, let's see how that pans out. Our stop loss is obviously, as we say, catastrophic, given it's all the way down in the parabolic saw. But we can move it up again. Oh, hang on, we can't move. That's meant to edit my stop loss. So we're moving it up to 79. So 79. Oh, that's where the next parabolic star is. Oh, actually, we move up to, there we are, 79. And really, we got filled here because it was coming down. Our stop loss should be a bit tighter, probably around about there, to be honest. But let's leave this for demonstration purposes anyway. So there we go. So there's nothing going as far as a mean reverting strategy is concerned. We got a trend to the upside. The DAX, how's that's going to be impacted by the start of trading today? Well, that's already gone long. Crossed up there, actually. The cross was, but then it had gone back down by then, hadn't it? It's crossed there. So the clean one really is there. So the DAX would have been long from here. And I might have got out on that big negative candle 5 minutes ago. See, because it's, we'd have been straight, we'd have got in here. So that's about our entry. Stop loss would have initially been down here. And then as we've moved up, so we've got to that candle there as our entry here. Our stop loss is still here, but we're below our entry. But traditionally, I'd have had it there as we've got here. So 1, 2, 3 candles back, 4 candles back, and it would have been taken out on that turn back there. Okay, see why I talked about yesterday about the parabolic saw being the catastrophic loss. It's the worst case scenario. It's a bit too tight when you're trading these short-term time frames. So entry here, out here, and but it's still, if we make a new high here for the with the DAX. I'd be happy to re-enter that. And our MACD and signal lines still start to move back up. They've flattened out. It's the only thing that's putting me off jumping back in on a continuation trade. But see how that pans out. We'll come back to that one as well. The Dow here on the a bit like the Nasdaq would have gone long here. So long here. Let's use this my standard stop loss rather than the parabolic stop loss. So that's our entry. 1, 2, 3, and that actually sort of coincides with the bottom of that candle initially, and where the parabolic SAR is. So it's not rolling over. But obviously, this is the issue about trying to trade when you got the volatility of the open about to hit. So we're 12 minutes still away from the open. We'll just leave all those indices open. And look at the other markets. Crypto, we were at 66,400 now on Bitcoin. Let me just go back to my Polygon because it's got all the lines in it. No, as long as it gone. Have I Oh, it looks like it's taken all most of my lines off. Yeah. Indeed, it has. Oh, there we are. There's because this is the 5 minute. But another week day yesterday, round about US Open yesterday, we went to 62,300. We recovered from that since, and we've recovered the 65 handle. It looked like we were inevitably charging down to 60,000, but if we go up to the higher time frames, you can see it's still pretty dismal with with a bias to the downside. And there we are, bang into 65,000. We got some buyers clearly yesterday. The bottom of the Bollinger Bands provided a bit of support as well, so it might have a bit of support here. See how today pans out really, but the big break under the 20-day moving average is still in play. We've consolidated here under 70,000, and we're biased, as we said yesterday, to the downside. Big down day on Monday. Bit of consolidation yesterday, but still we closed lower than we opened, so it's still a red candle yesterday. A bit of bounce today, we shall see. Obviously, it looks like we've been stopped out on the Nasdaq as the open has come around. We'll come on to that. So Bitcoin still looking relatively negative in the higher time frames, but having a better day today. Obviously, upside target is 70,000. That's a long way away now, hitting it 64,500. But again, moving a bit higher, a bit of tracking higher at the moment going into the open. So Bitcoin getting a lift on the back of the indices as well. Oil market 65.98, so down from the 66 handle we'd got to yesterday and beyond, and drifting, continued to drifting lower this morning. We went to 65.60, so ticking to the downside. Nothing really that moved the market in anything that President Trump had to say with regard to Iran or not, or Russia or Venezuela or Cuba or any of the other foreign situations he's interested in, shall we say. So oil $65-66 currently on WTI, and the dollar sort of weakened a wee bit on Trump's announcement. So this is 2 o'clock last night. So the euro dollar moved higher, moved through at 118, but since then just couldn't hold it basically, and we've turned around and we've had quite a significant move down during the European session this morning and into the bottom of this. You can see this hourly channel here, this horizontal channel as it is now, at 117.70 is where we found support again, and we found support all week really at this 117.70 area here. So once here, once here, once here, and again today 117.70, a key support area for the euro so far this week, but we can't breach 118 to the upside, so more sideways action. And again, if you look at the higher time frame, the dollar The dollar is still holding the bid. We're under the 20-day moving average, and we're into that 8th or 7th day now. But really, it's this lack of direction for the last week or so since the big sell-off we saw on the 18th. So coming into month end, are we going to recover 118? It doesn't look like it at the moment. Lots of rejection, lots of high wicks that have been sold off, and we're sort of pivoting through that and holding that 117.70 area. So watch that as we go into the end of the month. Maybe a bit of volatility. Not a great deal of news. Obviously tonight, got the Nvidia earnings. Let's see how the outstanding data point. Lots of chat from the central bankers as well this week. We got claims tomorrow and Friday's. What is Friday? I forgot what's Friday's webinar about, but Friday's fairly quiet. And next week, obviously, it's the new month, and we've got non-farm payroll a week on Friday, ADP on Wednesday. So along with PMI data as well, and that should be a really proper clean reading for the non-farm payroll data for the March number, or the February number that comes out a week tomorrow, a week on Friday. So busy week next week, quieter week this week to round out February, which has been interesting in itself, hasn't it? Let's see. And any clarity on any of the big geopolitical issues would obviously be a market moving event. So euro under 118, 117.70 is our key support area. The yen 156.65 today, dollar bouncing back. Yen weakness continues this week, but we're still shy of the 158 area. That's a big resistance on this big thick channel we put in a while ago now. So 152 was the floor, 158 is the top. We've been zigzagging between the two, calling our little W. So will we get to 158? Will we see some intervention from the Bank of Japan or not? The weakness of the yen continues. And mixed messages really coming out, both from the government and members of the Bank of Japan. But you can see here, clearly moving higher. 1, 2, 3, 4, 5, 6th day above the 20-day moving average, rounding bottom here, moving higher. Resistance is the top of that last leg down, just shy of the 158 or 157.60 for upside target for dollar yen. Sterling 135 and holding. Come back a bit this week, bit more enthusiasm for sterling than the euro. So over the key handle of 135 today. 4 positive days, minor moves, of course. We have got the spring budget statement. Some of the data coming out of the UK has started to show green shoots, but huge political pressure on the Prime Minister still remains. There's a major, well, not major, but there's a by-election in Manchester, and it looks like a 3-way split between the far-right Reform, the radical left, as many call it, the Green Party, and the incumbent Labour Party, which won it significantly at the election just a little over 18 months ago. See how that pans out on Friday morning or Thursday night when the data comes in. But as far as impact on sterling, obviously a bit of a minimum unless there's some political bombshell that comes from that. We've had obviously the Epstein files and the Epstein scandal sweeping through British society with Mandelson and former Prince Andrew being investigated by the police. Multiple forces investigating Andrew. So sterling back over the key 135, relatively well bid this week, but obviously still in the under half of this Bollinger Band, and big resistance at 136 where the 20-day moving average sits. But it looks like this down leg, which started at the end of January, may be over, but too early to tell because the bounce is very weak. 3-week candles this week, Friday and Monday, Tuesday, and better one today. Can we hold 135 as we go again into the end of the week? But it looks like, as I say, may be over, may not be over, but 134.50 was our support earlier in the week and on Friday for sterling. On the downside, Aussie quickly is 71, so bid again, and the yen, sorry, not the yen, the Kiwi 59.70 also lifted against the dollar the last couple of days, so up a tad but still in the under half of the Bollinger Band. Aussie, on the other hand, holding the upper half of the Bollinger Band. So Aussie, one of the better performing of the currencies. Near neighbour, dollar CAD, 136.90. Still relatively weak. US dollar holding above the 20-day moving average for over a week now. And Loonie, but not being able to break literally where we are now, over 137, is a key resistance area for the dollar CAD pair, with support down here at the 20-day moving average, 136.30, and the big round 135, the bottom of our Bollinger Band range now, as we squeeze up, as we tidy up. So mixed dollar performance, basically. So waiting for more data next week. Let's just go back to our short-term trend. The Nasdaq had been stopped out, didn't it? Because we didn't put a target on, we put a stop loss on. Let's go back to our 5 minute. Yeah, there we are. So we were, what did we do? We went long on the, it was the MACD, wasn't it? I can't remember. What did we do? Close positions, have a look. We were by the Nasdaq. Well, we pulled it up a bit tight, didn't we? That's right, because it looked like it was. So we caught the reverse, unfortunately, by the looks of things. So let's just go back to the layout we were using to take that, which was our SAR, wasn't it? Our parabolic SAR. Oh, there we go. We get stopped out, even though our stop loss was. Oh, did we move it up? Oh, yes, we moved it to 79, wasn't it? So it had literally just got stopped out, and now it's turned around again. But the parabolic, as you can see here, this strategy would have flipped anyway, because we've got in here on, and then it's dipped again. The parabolic SAR has flipped, so we would have got out there anyway at 25.88 at the bottom of the candle. If I'd been watching this properly, right, we left it with the parabolic sign. See why I'm saying it can be a catastrophic loss area, because it's so far away, and I tend not to do that. But as you can see here, because of the choppiness of the parabolic SAR, the blues crossing from above to below, above to below, above now. It's really, we're still tripping higher a little bit, but it's no clear move. It's very choppy, and it's one to stay out of. The MACD signal line and the MACD line flattening out, not very directional. Chopped above, chopped below here. So this would have potentially triggered a short. Yeah, indeed, it would have done. Triggered a short position with your stop loss up here. So this would have been short on that candle there. So it would immediately swap from long to short. But as you can see, again, that would have been stopped out now, literally as we can. So this is now saying long on the open. So we're going to buy that on the open. On the oops, I didn't put stop loss in, didn't I? I'll probably get stopped out on that one. Sorry, I should have waited for that candle completed. But that's a tick higher. Let's see if we can. It's probably going to close me out, because I've got to put stop loss on later, isn't it? So that's on my stop loss now. So here's the candle. So I want my stop loss here at 25.88. So 25.088. But the risk obviously is that we've got the volatility of the open to deal with, but we are in the money, and we drag the stop loss up as it moves. But again, just trying to trade the open. Be happy to take that off. There's a previous line from somewhere. It's usually a reason that that's on there. So we may take, if we get to that line, I may close it out. But at the moment, that's still moving higher. Expect a potential retrace, but that's the opening trades going through. So lots of chatter yesterday, or the day before yesterday, we had that sell-off about buying the dip, particularly Nvidia's numbers are coming out today. So those that fear of missing out, feel they want some exposure to the actual data tonight, might be sort of putting their finger in the mountain. We've had this ongoing bid for Paramount from Warner Brothers and Netflix ongoing. That's still running. Yesterday's big move was AMD was up 8.7%, PayPal was up 6.7%, and Salesforce was up 4% and a bit yesterday. So some big movers yesterday. All eyes on what Nvidia are going to show us later on today. So I'm happy to take some profit on that, risking the move high. And let's have a look at what it looks like on our mean reverting strategy. Bollinger Bands and stochastics were burst out at the top of the out the top of the Bollinger Band. Was still moving up. Our moving average crossing strategy will also be positive, and indeed that's been positive. All day basically. 20 days kept us long. We've moved out here, got back in there. This would have been long. Got out, stopped out there because its stop loss would have been closed out, and then we've gone re-entered long there just before the open there because we've gone. In fact, no, it would have entered on this candle here, the 2 o'clock candle, because it's new high. That wasn't a new high there at the continuation trade. That's enough to take it. Obviously, the risk is we give back quite a lot on the open. But that's the that's the EMA strategy. Whereas the calmer, as I always say, the Heikin-Ashi candles would have been, in fact, they weren't, and that's very, very interesting. They weren't green at all. I assume these would have been all green, but there you go. Assume nothing. So strong little move here from 8:45 to 9:10, so 25 minutes up. Then it went strong short, which I think we took, didn't we, on the other? And that hasn't happened. And now this is a strong bid long position on the Heikin-Ashi candles. But again, here on the short term, the exaggeration of the spread on the indexes is, you can see that very clearly there. Huge 30-point gap there on the Nasdaq. But we are bid to the upside. That was stretching. In fact, it's widening, isn't it? It's widening a tad. So. There we go. So let's go back to where we were, which is our we were using the MACD and the SAR, weren't we? To the upside. So that's hit there. So I'll close that out. We'll close it out now. Make some profit. We've hit. Again, it's rather random, but these levels have been there for a reason. It means it's a reason from a previous level. So again, let's say it's going to happen, but we certainly. Got to a level that was previously marked on the chart. Now, technically, the system is still long. I say our stop loss was here. This candle needs to, literally, aren't we? We're just still, that candle hasn't completed, but we're in and out. More than picked up our loss. We just go back to our. So we lost 29 cents and we've gained 37 cents on those opening trades. So we're sort of in the money for a massive 8 cents to the upside. So there we go. So our stop loss now could be the bottom of this. I'd probably have it up here or around about these, perhaps these stars now as this is moving out. So I'm going to, if we got long, where we did on the open round about here, I'd have the stop loss at entry now, so we couldn't lose anything. But this is still, as you can see, still moving higher. And I'm going to go at what was our a stop loss from the 12th to the 12th, let's say, but an area we took some profit because it was a previous pivot area or previous area of congestion or something. That's the reason why the stop loss is sat there. So that one's taken off. The Dow, do we do with the Dow? Can't remember what we did. Did we go long the Dow as well? Yes, we did, but you can see that's turned around. So that's would have been stopped out as well. And there's the parabolic SAR. So that's flipped short now as well on there. So again, that's another one that's gone short now. The stop loss there. And the entry here, because that's gone short on this going down. As I say, there. So let me just make sure I got that right. That's that red one. That's my. Oh no, I'm doing it the wrong way around. That's my entry. It's green, and that one is red. So that's our short on that candle there, having filled on the open. So see what happens on that one. Moving down today, it's not great on the 5-minute. The MACD and SAR much smoother on the higher time frames. And the DAX continued to move higher, or has that rolled over as well on the US Open? Let's have a look. No, that's still moving higher, isn't it? Again, we'd have. What do we do with the DAX here? Was that that's the entry? Oh no, it come back as our stop loss would have been taken out, hadn't we? So that's still moving higher. So we said we'd moved our stop loss up there, and that would have reversed to it. So that would have been close. So it's still moving higher. We'd like to see this. If this touches, it's likely to the parabolic SARs are likely to come above, but we haven't had the touch of the MACD. Remember, the MACD and the signal line need to cross first before the flippiness of the parabolic SAR could be taken into account. So the parabolic SAR might flip, a good 3 or 4 candles before these two cross clearly. We're obviously coming back to it at the moment. And so the mean reverting strategy now will have come into its own. So our Bollinger Band and stochastic strategy, there's the first touch of the one. In fact, it's back there, the first touch of the outside of the Bollinger Band. We continue to move high. This is what was happening, wasn't it, before? But now we've got that roll. We went higher, then retraced, then we went high, then we've rejected it. So that then is a clear, that's our second. So that would have been a failed short there because it's gone against us. Our stop loss would have been taken out. We've got another chance there on this candle. So this would have gone short there on the open and with target stop loss above the wick of the candle we entered. Or I would have had it a bit more conservative at the top of the Bollinger Band there, 25,178. Entry there. See, this is what we were suggesting. So it's a matter of patience and waiting. And see, we get that mean reversion on the open, or you chase the move as we did with the Nasdaq as it opened really aggressively. So that would have been a short here if we'd been watching that. So that's green for go. Stop loss, on the other hand, would have been top of the. Certainly there, it's probably somewhere around about there. See how this candle closes, and it'll probably have pulled it down to about there. As this, it could reverse straight away, but that's short, and the target zone is here. I'm not sure why 25,138 is on there, but anyway. We shall see. So if there's any questions, guys, let me know. I've got to check my messages. Nothing on here. Nothing on there. Check my chat box here. Nobody's got anything to say. Okay, fair enough. Let's have a look at gold, how gold's done. On the open, 5164. So it was 5165 earlier, I know. So that's come down on the open. That's the touch there. That's not a clean. That would have been on that volatility there at 1340. That would have been a short position. Stop loss just above the top of the Bollinger Band now. See, we count back. So there's 1, 2, 3. I would have gone back to there at least, and there, and just outside the Bollinger Band, and we're still short. Whether I'd have probably taken some off on that candle there, because we did get through the midline. Remember, that's target 1, but then taking some off here on that candle there. Again, with having seen this level here, I'm happy to have left some on. So 50%, 30% off, and 20% off running down, and final, not get too greedy. Either keep it running short, but you can see it's bounced back. But soon a final target this low, we'd got to 1120. We've also hit it, so that's a big old candle. I've been happy to have taken some off there, but again. Other than that, hold your nerve and wait till the K and the D line reverse. But by then, usually the move has already happened. So certainly on the 5 minute, if we go down to 2 minute, you'll see that will have already reversed. There we are. So there's the move down to is there. Obviously, gave up because there was more to come on the 5 minute time frame, and that's what tends to happen, doesn't it? But you just got to wait longer, obviously, for the candle to complete. It's up to you what time frame you trade. I know a lot of scalpers get really, really twitchy, either manually, even doing it, automating it on the 1 minute time frames. But there's so much volatility on those short time frames. You don't want to be hanging on for more than 4 or 5 pips, whatever strategy you're using, whatever asset you're trading. If you're getting 10, 30, 10, 20 pips on a 1 minute trade, bag them, my friends, because they can soon turn around and go back. This is a great example here. If you've thought, we'll leave, that's a target zone, we got to it really quickly. The K and the D line are not yet in the overbought zone. Actually, by then we did have one of them in the overbought zone. So, but wait till they touch before I get out. You're given back all that previous 5 minute profit. So it's pays your money, takes your choice, my friends. But the strategies are pretty clear. The rules are pretty clear. So I always say, stick to the rules. Don't get too greedy, certainly on a short-term basis. Okay, so gold short just ahead of the open. The opening trades took us lower into the lower. I'm assuming that's the lower day, and not quite. No, here on gold, the low this morning was all the way down here. Actually, this blue line, interestingly enough, or more or less. So it's a bit lower than that. So it's another leg, isn't it? It's another quite so lower the days down there, that 5,040, and our high of the day is up there in very early European trades at 5,209. So 5,200 has been a resistance area today. In fact, it's 195. So 195, 195. And 190. So it's not massive, but it's the highs are getting lower, aren't they? The lows are getting lower until now we've bounced out. So there's your range, and then see how we react to it. So we've had that leg again. If you just try and trade this as a leg for the day, that was our move to the upside. We've come crashing back through. We didn't stall at any of the fib levels. Bang, 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 all the way through. Not only 61.8, but 78.6 as well. And in fact, there was a horizontal floor that kept us in at 4116. So buys again. It's bounced back up. So that wouldn't have worked. But certainly you're out now because they've crossed. But I say you've given all that back. So it's a great example of you either wait and accept you're going to give some back, or be sensible, or say be sensible, have an idea that we did get to this two candle floor here, 11.15, 11.20. We've done exactly the same thing here at 11.14.35 and 14.40. So bounce to the upside. So let's say -5. So we had that's just today, wasn't it? We only done those two, haven't we, today? 25th. Yeah, that was the other day. 25th. So let's just go back to our indices, which is what we were here for. So the Nasdaq, where have we settled? So we continued. So the move higher through the open. We're now, as I say, 15 minutes in. So the first 15 minutes has been positive since the open here, and that's completed. And we're now into our third candle. But we were starting to run high just before the open there. So that's higher. The DAX may have rolled out. Yeah, the DAX is rolled over. So again, that was our short entry, and again it's going back against us at the moment on that one because we're still in the overbought area. Our FTSE, I don't know if we put anything on the FTSE, did we? No, we've come back down from the all-time high, but again the FTSE's playing better than the DAX today. So there's a clear short entry there, right on the Bollinger Band. It's whatever time was that? That was 14.10, and now we continue to move down. And again, don't get too carried away. That was at our low of the European session. No, it's not. So it bounced off there. So again, take your profit on that if you'd been short that one. It's performing a bit like we saw the Nasdaq as it's moving back up. We haven't had a cross, but they're now both in the overbought area. So we may be looking for a cross to go long here on the FTSE potential. I don't really trade the FTSE on a short-term basis, but it's still, it's tradable, and it still follows the rules. Perhaps not as well as the others. That's the only reason. But that's looking to move up, so it's following the rules a bit better than DAX has today. Dow 49,400, so choppy open as ever. Lots of volatility on the 230 candle. So the pre-market high actually went all the way up to there to 49,445. We haven't actually got there yet in the live session, but it's not clear which way we're going. We got a down candle, an up candle, a down candle, an up candle. So sideways, a little bit biased to the upside because the trend is up. So again, if you're just taking trades with the trend, just take the long ones that trigger rather than taking them all. But again, that's down to you as an individual trader and how you manage yourself and your risk and how many trades you're interested in taking. So there we go, my friends. For 25 minutes of the day. So let's just have a quick look at the calendar. There's not a great deal on there for Wednesday. So the main event is Nvidia's earnings after hours tonight. Obviously, Nvidia, major component of the Nasdaq and the S&P 500. World's biggest company now. I'm trying to find the calendar. Sorry, apologies for the top of my head. And I was just going to bring up Finviz as well. Really clear, nice. I like Finviz. Those of you that haven't seen this before, I've shared this a few times. Free site. You can pay for extras, obviously, with Finviz, but it's clear. It does what it says. Visualizations of the financial markets, and you see here there's the three major markets in the Russell 2000, all green today. We've opened positively. That the red dotted line is yesterday's close, so they're all in the green. Little graphic of the US S&P 500. You see the darker the green, the light, the bigger the move. So some big moves. Tesla up 2.2%, Broadcom up 2.5%, and the red is obviously the losers. You can see some losers here in the financial services sector. So there we are, click on that. That looks like Workday off 7%, some big movers. I say the darker the green, the bigger the color. So Micron up 2.9%, Broadcom up 2.5%, and Nvidia plus 0.63 of 1% ahead of the earnings tonight, as I keep saying. So let's look at their banks coming back quite well as well. They've been under pressure a little while. So anyway, Finviz, really nice site, simple, free, and got a good eyeball of what the stock markets are doing. But you can see here on our 5-minute mean reverting chart, lots of rejection of higher prices, rejection of lower prices as well. So we're sliding literally through 49,360, 370 here on our system here on the Dow. So not a lot going on there. Our stochastics are biased a little bit to the downside, but it's very much sideways action there from the open. So if I look at the main events for and the rest of the week, we'll be with you for the unemployment claims tomorrow from 1:15, 1:30. The data comes out under 200,000 and 220,000 again, 206,000 last week. Remember, people either not in the seeking work, or the tightness of the jobs market is still um, evident from the unemployment claims, but lots of data contrary to that, showing a weakening of the labour market, and those with earnings still going up quite nicely. Those trying to find work find it quite difficult to find work, but those are the not new claims coming into the market. So there's a lot of supply being squeezed out, but the demand is quite weak. So we're flattening out, and that's why the NFP data's fallen down so much. But the U.S. economy still seems to be ticking along. So PPI on Friday, it's delayed because of the government shutdown. It's 2 weeks behind PPI and CPI was. Remember, PPI is important because it feeds into consumer price inflation. It's a bit of a longer lag. But, if producers are putting their prices up, obviously consumers paying high. And, that's been the issue with tariffs, hasn't it? It's been the consumer and businesses that have been paying it. The government's been charging it on entry, but again, Trump talks about clarity, but he talked about immediately 10% when the Supreme Court ruled against him on Friday. Saturday's toys were really out the cot, and he said, 15% is the biggest I can charge legally, comfortably, without getting hauled in front of the Supreme Court again. But then the actual implementation looks like it's only been 10%. But that only came in on Monday, 3 days after the announcement. Obviously the uncertainty now is how many corporates in America are going to start claiming that the tariffs they've had to pay back from the US government, potentially billions, millions, if not billions. A bit of a bind for the president, but he will tough it out. It is his way, isn't it? So anyway, see where we go. Main news this morning was that hotter than expected inflation data out of Australia, 0.4% for this month. It was expected to be half of that. It's much weaker than it was last month, but it's showing a persistence, and it's meant that the annualized numbers have gone back to 3.8%. So the story we see of the stickiness in inflation, and it's a story we've seen for generations going back in time, that it's very difficult to eradicate it or push it down to that key 2%. And then when you get there, sometimes it goes too far, and we move into disinflation and deflationary situation, which can be just as bad, and stagflation, which can be just as bad as well. So it's a very difficult balance, but still fairly sticky, hot, you'd argue, inflation data is in Australia at 3.8%. So I say claims tomorrow. Tokyo, huge city, urban area, with their inflation reading tomorrow as well. Somewhat negligible in private. They've got the opposite problem in Japan, trying to get prices higher. And a German federal reading of CPI for the month on Friday as well, Friday morning. So that's to round out February. So we'll be with you for the claims tomorrow, and the US CPI PPI data, and Canadian GDP for the month as well on Friday. So take care, everyone. If there's no questions, I'll wrap this up. We're just about at 3:00. And take care, my friends. Let me leave you with the see if the stock markets have decided what to do. Well, in the last 5 minutes, we're moving lower in line with our stochastics. No, it's a MACD, isn't it? So, not use MACD on this one, but our stochastics continue to move lower. So we're moving lower on the Dow, the Nasdaq. It's positive start. We took some profit off here, didn't we? It's moved up since then. And looks like we may be rolling out, but in an overbought area, we're running out. So if we kept that running long, it would have kept us moving higher. The DAX, what do we do on the DAX? We went short. That's been stopped out. There's our stop. There's our entry. So that's that would have been a loser. It's continuing to move over. But are we going to roll over? We've come out of the overbought area, but with prices still moving up. So we've got divergence. The stochastics are moving down. Prices moving up. We've had another touch of the outside of the Bollinger Band there on that 5 minutes, so this might get a bit, that might be looking to move down quite aggressively, or the uptrend is completely stripping out any potential for mean reverting. So if we look at the 5 minute, moving averages here, the 21, the 5 and the 9, the 9 and the 5 is supporting the DAX to the upside here over the last hour or so. So that's continued to move higher, and we haven't closed below this mid moving average, which would be our stop loss. So our stop loss on that one there would be here at this moving average. So we wait for the candle to close below. Here we touched it, we didn't close below it. Touched it here, but we haven't closed. The candle body hasn't closed below it, or the wick hasn't. We haven't closed below it. We closed above it, didn't we? The red one there closed right on it. So this is still long, and it has been long from back here at 13.15. Big reversal would have took us out, but then we'd have got back in there at 13.35. So that one's been long since 13.35 and trailed our stop loss up. Might have got reversed there. If we got it too tight, reversed there as well, but we're still long using this mid moving average as our stop loss. So the trend, as you can see, is outstripping the mean reverting strategy. If we use our VWAP and Heikin Ashi candles, you see there's a bit of hesitation, but because this is on a 5 minute, but that's a strong positive candle, isn't it? 3 positive ones, 1, 2, 3, 4, 5 positive ones. So you see the trend is very much to the upside. The body of the candles increased substantially here, hasn't it? And then again here around about the open here. Remember, this is the opening frames with this negative one here, 31 here. So up. So again, so the trend is outstripping any chance of mean reverting on that. So be careful trying to catch the top there on the DAX as we come into an hour and a half left of the trading session in Germany today. Okay, I will see you tomorrow and Friday. Stay safe, everyone, and have a good evening. I'm off to go and see my grandson, collect him from nursery. So